Hello there, I hope that you are doing well. During this trades breakdown lecture, I will be discussing trading trending markets using open dynamics. Here we are on the hourly chart of Nasdaq, and what you can see is that Nasdaq was in a free fall over this past week. What you can see is that the market repriced all the way from the 20,000 price level on Wednesday down towards 17,500. Going into the day of Friday, I was leaning towards further continuation lower, and the reason why is because in such a bearish market, you never try to capture a bottom. Inside this bearish market, we were only looking for shorts, and what I would like you to understand is that due to the fact that the market was so heavy on the downside, we wait for the market to open high. Because it's inside of a bearish trending market that what we're looking for actively is looking for an open high to occur, because it's inside of that open high that manipulation is taking place, which is going to get followed by further distribution lower. Going into the day of Friday, I outlined the 18,000 and 17,500 price levels. The 18,000 price level can be seen right here. This is this green line, and it was reached early on in the morning session. Meaning at 7 AM we opened low and we saw the market reach that 18,000 price level. We saw a retracement taking place into a CB which got established, and we then saw the market expand towards the downside even more throughout the morning session. Notice, however, that the market did not reach 17,500, meaning we stopped in advance of that right here. Therefore, going into the afternoon session, what I was looking for the market to expand towards that 17,500 price level, because this is the drawing liquidity, meaning this is the final objective for the week. And because we are not trying to capture a bottom, we are waiting for the market to retrace higher so that it can expand towards the downside. When we zoom into the 15-minute chart, what I would like you to see is that the AM low can be seen right here. Notice that throughout the other part of the AM session, the market retraced. We then saw the market expand towards the downside, and throughout the lunch, an expansion lower occurred. Throughout this expansion lower, we saw a 15-minute imbalance get created right here. Notice that we saw the market open up at 1 PM then, and the market initially ran lower, taking out sales liquidity resting below this morning session low. We then saw a new low form which set up a retracement higher. However, before we dive into that retracement higher, I would like you to think about why the market first takes out the AM low right here and then forms a new low and retraces. Please pause the lecture for a moment, because I'm going to share the answer with you soon. I know that some of you never pause these lectures, but man oh man, you're wasting opportunities to learn. Alright, I hope that you passed the lecture and that you thought about the answer to my question. The reason why the market takes out the AM low early on in this new 90-minute cycle, which begins at 1 PM, is due to the following. During this drop lower, what's occurring is that sell stops are being triggered. Sales liquidity is resting below this low, as you know. However, through this repricing lower, what's occurring is that retail mind traders are led to believe that further continuation lower is going to take place right away. So what they do is they chase the market short right here. What does smart money do? Smart money is actually buying against that. Why? Because they know that the market first has to be repriced into a premium before it is allowed to expand further. Therefore, what's occurring is that a new low will form below that previous session low, that AM session low, to retrace higher, trapping people into believing higher prices are now taking place and that the market is now going to expand towards the upside. Daily low is in, yes. However, what occurs is that the market reprices into a premium of the session range up until that point. Pay attention to the session high, so the lunch cycle high, to the session low, so the PM2 low right here. And we see the market reprice into this old inefficiency right here. Notice that at 2 PM, this down close candle forms, which opens high. Pay attention to the word use. Open high. It's inside of that open high that what's taking place is that manipulation is occurring. We're taking out a previous 30-minute cycle high, which is right here. We then see a rejection taking place. We wick above the price range of this CB, but notice that the body is respected beautifully. Buy side of the curve, sell side of the curve. This is our market maker sell model. As you can see, the market stopped right in advance of 70,500, which was my objective. So that was a bit unfortunate. However, the run from this CB right here all the way down to the sell-side liquidity pool was already more than enough. The runner eventually got taken out, and that was what it was. Because the thing is, guys, do you think that if you're short up here and the market is or has expanded 300 points in your favor, you're going to let it come back 300 points? Of course not. That would be ridiculous, right? So I was very happy with the trade management, and then eventually the market reached the objective shortly after the close. When we pay attention to the 1 minute time frame then, what I would like you to see is the following. What I would like you to see is that we have that 15-minute imbalance plotted right here on the charts. And next to that, I've plotted some other lines, which I'm going to walk you through. 1 p.m. drops towards the downside, takes out the morning session low, and then forms that new low. What I want you to see is that this run higher, which occurred right here, was not the quickest. There was a lot of back and forth going, as you can see. And why is this important? This is important because this is the engineering of new sell-side liquidity which is taking place, where a lot of retail mind traders are going to look at this as a strong uptrend. They're going to draw their trend lines and they're going to think to themselves, the market is very bullish. However, what do we know? We know that our drawing liquidity down here is yet to be reached, and therefore we anticipate that the market is going to draw towards that before the close. When we then see the market begin to run towards the upside, or we begin to see it get repriced into a premium of the current session range, we can anticipate that when a new time cycle opens up, that we're likely going to go open high to then turn around. Because what I would like you to see is that the market opens right here at 2 p.m. and immediately runs higher. Why is that important? It's in this open high that the previous 30-minute cycle high is being taken out, and that the market is being repriced into a premium of that session range, and it's being repriced into an all-time efficiency. Do you see this CB, which I've annotated right here on the 1 minute chart? These two black lines. Do you see how that displays through the 70,900 price level? Do you see how we're trading near that blue shaded box of that 15-minute CB? We see the market reprice above it, doesn't matter. Why not? Because it's repricing into that 70,900 price level. What we see taking place there is that the market eventually forms a smart money reversal and S&T gets established. The market displaces towards the downside and it displaces below that blue shaded box. Now here I'm teaching you a very important algorithmic signature which I've been putting emphasis on throughout my previous lectures as well this year. That's the following. Do you see that blue shaded box of that CB? Do you see what gets created when we reprice away from that? Do you see this red shaded box? That's a smaller CB. I believe that for the majority of you that are completely new to the markets and you're completely new through looking at them through the perspective that I'm teaching to you, I believe that this is the entry you should focus on. Entering in the smart money reversal takes years of experience and you need to know exactly what you're looking for when it comes to open dynamics. Meaning open high within the right delivery profile, understanding that the market has yet to reach a drawing liquidity. And you must be able to time reversals, but that's something which is going to come if you pay attention to detail. This right here, this entry inside of this CB, this institutional order flow entry drill, man oh man. It's one of the sweetest entries which you can find. And the reason why is because you're waiting for an SMR to form and then you're trading the low risk sell which is taking place right here. And I believe that the majority of you should investigate this entry right here. What I would like you to see is that the market displaces away from that higher time frame imbalance with a smaller imbalance. A retracement occurs in there, and that right there is I of fat, which is taking place inside of this BC. This price range has now become balanced and the market is allowed to expand towards the downside. Do you see how the market reprices through this low right here? What is this low? This low is a bearish breaker. Why? Because we have a high, low, higher high, lower low. Therefore, this downward candle should function as resistance price if the underlying order flow is in fact bearish. We see the market spend some time there and eventually it begins to roll over. What is the market drawn towards? The market is drawn towards sell-side liquidity resting below this low and the low above, which is the previous 30-minute cycle low. We see the market create a CB right here and consolidation takes place inside that CB. Why is that consolidation taking place? Because what you see taking place is that smart money is filling in more shorts. Why? Because they know that the drawing liquidity is yet to be reached. So what is happening here is that every single time that the market is trading back into that CB right here and stepping that, more shorts are being filled. Eventually the market runs towards the previous 30-minute cycle low, and I paused accordingly when I saw that a small SMT was established. We saw the market continue expanding lower at 2:30 p.m. and we saw it draw towards sell-side liquidity resting below this low. Again, I partialed right in advance of the low, and the reason why was due to SMT. Meaning, imagine, yes, if this SMT would have been utilized to reprice all the way back towards the upside like it eventually did. Imagine, yes, being up nearly 300 points on your position and letting that occur. I would be frustrated then, especially since I'm now on holiday. So I just want to be in and out of the markets, I want to make money, and I'm done. That's my mindset now. I want to spend as much time as possible with my loved ones, with my family, to create lifelong experiences, right? So when I saw this opportunity throughout PM, I was like, yep, that's a short for me. Therefore, I managed it aggressively as well. And eventually, the market did take out that sell-side liquidity pool and expanded lower. Notice, however, that the market stopped right in advance of that drawing liquidity, and we formed a new low. The moment I saw this taking place and I saw the market displace above this CB right here, that was immediately for me the first warning sign of, okay, I might actually get my trailing stop hit. When the market traded above this high, my trailing stop got hit and I want to be out. Why? First of all, this CB should have functioned as resistance price. Secondly, this high should have remained intact because this high formed inside of this CB right here. This high set up that final run lower, so this high is a bullish breaker. Low, high, low, low, high, high. Therefore, I know I need to get out because now order flow is changing. Eventually, we see the market in fact reprice all the way back towards the CB and begin a new sell program. But unfortunately, I wasn't behind the charts anymore back then. But that was a beautiful shorting opportunity as well, and was happy to see some of you take it as well. Now, when it comes to the topic of this lecture, open dynamics, I want you to start paying attention to how the market opens at these key opens relative to where we're at within the overall delivery profile. Once you start to become good at recognizing delivery profiles and recognizing where manipulation is taking place, trading distribution will become straightforward. This all has to do with recognizing A to B. And that's the whole topic of the model series of 2025. And that is what I'm teaching to you within that mentorship. With it being said, I want to thank you for watching this lecture all the way to the end. I hope that you found it insightful, and I want to wish you good luck in your studies. Be safe.